we're looking at question number 1. And question number 1 is a cash budget, because I quickly ran down here and looked at this. And it says the following information from Melbourne Machinery, which commenced business on the 1st of October 2013. It's got some estimated sales for October and November of 50 and 55,000. It says its cash sales are estimated to be 20% of my total sales. My debtors are expected to pay 50% in the month of sale and 40% in the month after sale. I got some purchases for October and November, and it says all purchases are on credit and are to pay in the month following the purchase. Oops. Estimated operating expenses for office salaries for October was $9,000 and November was $11,600, and they were paid in cash. Depreciation of equipment was purchased on the 1st of October for $250,000 credit, and it's 2% per month. Other information is the owner contributed $60,000 in cash, and he intends to withdraw $3,000 per month. So it says prepare a schedule of receipts of the debtors for October and November. So that's the first thing we want to do. So schedule of receipts. So I've got my schedule of receipts, and it's for October and November. Now some information here that told me let's just pop my sales in first, but I'm aware that there's some information telling me there's cash sales. So my sales for October were 55,000, or expected to be 55,000, and for November they were expected to be 50,000. Now my cash sales are 20%. So firstly, let's work out what our cash sales are going to be. And 20% of 55,000 is 11,000. And 20% of 50,000 is 10,000. So my credit sale, which is hidden behind the time there, but credit sale is 80%. So that would be 55 minus 11 is 44, and 50 minus 10 is 40. So that's my credit proportion, or my debtors balances are here, so for the first 2 months. I then going to try and work out what my collections are, so I'll have a collections area over here, and there'll be collections in October and November. And it says that I collect 50% in the month of sale and 40% in the month after, so 50% of my collections for October will happen in October, and then 48% will happen in November. So that means that 50% of my credit sales in October, let's start that again. 50% of my credit sales for November will be collected in November, and 48% is in December, which we don't have to record. So let's just work this little bit out now. So we've got 50% of 44,000 is 22,000, and we've got 48% of 44,000. Who's fast on a calculator for me this morning? Just yell it out. Two one one two zero. So 21,120, and my 50% of my 40,000 is 20,000. So my receipts from debtors, or schedule of receipts from debtors, is for October is 22,000, and for November is 41,120. And I have some cash I've collected out here, but that's in the month of sales of 21,000. So don't forget your cash bit when you're doing your next step. So that takes care of A. I've prepared my schedule of receipts. So I'm now looking at B, which says prepare a cash budget for the 2 months ended 30th November 2013, showing the expected cash balance at the end of the month. Okay, so cash budget. For Melbourne Machinery. And we're doing our cash budget for October and November. Okay. Now, first thing I'm going to do is I'm going to record my cash from debtors, or cash from accounts from receivable, cash collected from accounts receivable. And it's 22,000 in October and 41,120 in November. So I can tick that off, I'll put that in, and then I'm going to do cash sales. And my cash sales was 11,000 in October and 10,000 in November, so that's important because it's still part of my cash flow. And 10,000. Is there any other cash I need to put in there, or cash inflows that I need to put in? If I scan down my list, other information, here we go. The owner contributed 60,000, so that 60,000 is important. So cash contributions, or contribution from owner. Is 60,000. And I'm pretty sure that ticks off all of them. Yep, I'm pretty sure it ticks off all of them. So now I just need to do a total on that, so 93,000 and 51,120. So that's my cash inflows. So my cash inflows. Now I've got to look at my cash outflows. So my cash outflows. And what are my cash outflows? It says here that we got purchases. So it says all purchases are on credit and paid for in the month following the purchase. So if I'm purchasing it in October, I'm paying for it in November. Purchasing it in November, paying for it in December. So let's say purchases. October was nil, and we got 30,000, which we'll pay in November. So I can tick that and that off. I've also got some office salaries. And I've got 9,000 in, because they're paid in cash. Yep, I've got 9,000 in October, and I've got 11,600 in November. Depreciation of equipment. Well, depreciation is non-cash. So just remember, you'll be tested around cash and not cash. And the owner intends withdrawing 3,000 per month, so that's a cash outflow. So I've got drawings there of 3,000 per month. 3,000 per month. Any others? I think everything's ticked off. Yep, looks like I got that. So let's just do total outflows now. I've got 12,000 for October, and I've got 30, 41, 44, 44,600. 44,600 for November. Now I want to look at what's my net cash flow. Now my net cash flow is just my cash inflows minus my cash outflows. So I got in October I got 93 minus 12 will give me 81,000. And in November I got 51,120 minus 44,600 which will give me 6,120 plus 400, 6,520. Now we need to, it says showing expected cash balances, so I need to show the cash balances at the end of each month. Now my opening cash position, now it doesn't tell me that I've got an opening cash balance, so I'm just going to have to make it 0, and that'll give me my closing cash balance. So my closing cash balance is 81,000 plus 0 is 81,000. And my closing cash for one particular month becomes my opening cash the next month. So I put my 81,000 into the next month. And my closing cash for November will be 81,000 being the balance, plus the net movement, which is 6,520, making 87,520. And that's my cash budget finished. So that's B. Now the last question is, on the 30th of November 2013, an instalment of 100,000 will be due on the new machinery. Will Melbourne Machinery be able to pay this instalment? Explain. So I'm looking at, can I make a $100,000 payment? I look at my closing balance over here, and I think I've only got 87,000, so can I make this payment? No. I do not have enough cash. And there you go, that's worth 1 mark. So it doesn't have to be a very long answer, it just has to address the point.